So Mr. Tang, could you explain to us more about futures and what youngsters should know about futures?
Futures is just different mechanism to invest. Probably I give you analogy that is easy for common people to understand. For example, let's say you think Singapore property will go up in the next 5 years, for example. Now you want to invest, either buy, let's assume we are talking about condominium, or because HDB is not easy to buy. You cannot buy two and so on. Let's assume condominium. You have a choice, buy the completed one or buy the uncompleted one. Assuming in that development there is phase 2 that no under construction. So you have a choice whether buy completed one, get the key, but you have to pay in full. Pay in full means you have to borrow money and pay in full. Or you buy the uncompleted one. Uncompleted one means you pay only 10-20%, depend on the ruling. And you have, let's say, probably 3 years until you need to get the key. If your purpose is not for you to stay, let's say you already have your own home, now you want to invest, just look at financial gain, then you can choose either one. But what is the pros and cons having these two? The completed one, you can get the key, you can rent it out, earn rental income. But at the same time, you have to borrow a lot, and you have to pay the bank interest. Okay. If you buy one, let's say you want to invest on another one, the bank may not lend you money. You already have two property, the bank will stop you from borrowing another one. But in the uncompleted one, you only pay, let's say, 10 or 20%, and you don't borrow money. But your investment actually is the full notional of that property. Let's assume the property is 1 million, equally 1 million. So if next 1 year the property up by 10%, whether you buy completed one, you make 100,000. Uncompleted one, you also make 100,000. But the capital outlay you put in is much smaller. That is the benefit. In futures market, also similar. Okay, sorry, I continue first. The speculator in the property market, normally they buy uncompleted property and then they try to sell before taking the key, before TOP. I think the term is subsell, right, in Singapore. So they don't need to borrow from the bank. They try to sell. In financial market, people who use futures also most of, I think probably 80%, 90% of them actually they don't want to take any delivery. So they invest, but they close before expiry date. Similar to that property. Now, then because of that nature, the future market allow us not only invest in stock, we can also invest in bond, we can also invest in commodity, I mean oil, gold, live cattle, also all can. Without futures, it's very hard. Let's say if you want to invest in oil, if you don't have the storage, how to take in the oil? But in future market, everything can be done very easily. Because why? Because let's say you buy for delivery in December. So as long as you unwind the portion before December, you don't even need to have storage. So the futures enable common people to invest in business that otherwise you can't do. Okay, I just show you a chart to show. This one is the Singapore stock index. Singapore stock index for the today one.
Yeah.
Okay, let me see. The yellow line actually is the Singapore stock index, but in futures actually the index that they use is not STI, but they call it MSCI Singapore index. It's very similar. So the yellow line actually is the Singapore index. The white line actually is the futures. Futures to be delivered end of this month. If you see the movement between the index and the futures, they are moving in tandem. So at the end, actually, in terms of financial payoff, you invest in the index itself or you invest in the futures, approximately you can get the same payoff. The difference in the index, you likely have to pay a lot, I mean full amount. If not, you have to borrow from broker and they charge quite high interest rate. In futures, you only put down payment. Normally they call it margin, like in your presentation. The margin probably is 5 to 10%, depend on how volatile the market is.